Hello and welcome to Moving Iron Podcast. Marks with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give the loyal listeners of the Moving Iron Podcast a free Axon Tire resource mouse pad, desk pad thing, right? So if you got the mouse pad, you have to have the desk pad to fully accessorize your desk. Otherwise, you're going to be out at the cold there. So check that out. If you got one of those, go to marketing@axontire.com and they will get one to you in the mail. Just send an email to marketing@axontire.com and tell them Moving Iron Podcast sent you. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. No matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom's has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. And finally, this podcast is brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with their integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. And he's nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you been, man?
I'm good, Casey. I'm getting ready for your summit. It's right around the proverbial corner.
Yeah, me too. I'm getting ready for it as well. And things got pretty busy there. So I had to take a week off. It's good to see you again and talk about what's going on. And just about like normal, there's been a ton of stuff pop up. You've got the old Pro Farmer crop tour going on right now. And it's pretty much verifying what you've talked about the whole time on the show so far, Shawn.
It really is. I mean, we just had too much heat for corn. And I always told everybody follows the rain, follow the heat. If it's too hot, you cannot have a top end crop. You will not have a top end crop. And it's been too hot. And even though we've gotten some timely moisture, it's just not going to deliver, on a trend line yield, and you're going to be moderately below trend. And, I feel that you are probably going to wind up in the low 170s yet again. I think it's the third year in a row we're going to be kind of in that subpar range. And when you look at the ending stocks, we're going to be at bare minimum pipeline levels yet again in the U.S., which means we got to start the cycle all over again and hope that we can deliver bigger production globally as we get started for South America. And so we're putting weather premium on now. We're putting it back on, both corn and soybeans. We're putting it back on because we don't have any ending stocks. And soybeans, even if you believe the 151.9 yield that the USDA came out with, which clearly, in my view, is not going to happen. They only said 280 million bushel carry out. So if we drop a bushel to the acre off, which is probably what's going to happen, we're down to bare minimum pipeline levels. So we just have not been able to rebuild these ending stocks, Casey. And until we do, the market's going to be needing to keep prices high to, until we finally now, if we do convert over to this El Nino pattern that we've been talking about later this year and into 23, we should finally have an opportunity for trend line or above trend line yield crops and put some of the ending stocks back. But there's a long time between now and when the market determines that. And so we're in the cycle where we see some nice upside here into September, October before we might price it all in.
Yep. So when you're looking at what they see happen there, I mean, what the USDA came out with the last Wall Street report and then what you see happening now. I mean, as you're looking at these, there's a ton of crop tours that go on, but as you look at these crop tours and they start happening, taking place, from an accuracy standpoint, obviously the best accurate measure of what the crop is to what's actually getting in the combine. But as you look at these crop tours, how accurate are they to what the actual end is going to be?
Well, the Pro Farmer Tour, which is really the one that's been done for a very long time, we have a lot of data. They go to the same places every year. They tend to be high. They tend to actually, too high. They tend to actually be higher than what the actual yield is, which is what makes some of their conclusions. And we'll find out what their actual final conclusion is. I think Thursday they come out with their corn yield, as a
Right.
overall basis. But if you look at just their individual reports, it doesn't look good, and they're typically high. So the market's gotten pretty worried that that given their high bias, that that 175-ish yield that the USDA came out with. Now there's a difference between what the truth is and what the USDA is willing to say, right? So,
Right. Exactly.
but it sure looks like we need to move down in the low 170s to me to get the number right, and that means we're at a billion bushel carry out again, give or take, and that's where we were last year, and that's where the year before. So, that's just not gonna allow the market to ease back on these prices. And so they crashed into July thinking we're going to have better crops, and we did avoid a disaster, but we did not have a good enough crop to actually change the supply demand fundamentals. And so we're now in rapidly putting price premium back on. As you know, we've been talking about a bullish turning point in the first part of August here. We thought we were turning much more friendly to grain markets, and that forecast, I think, clearly now is starting to prove out to be correct. We're clearly seeing uptrending markets now in grains, and we're turned a corner. I think the next important area to look at is like late September timeframe. I think by then we might price a lot of this in, and that might be the next place to be looking at some kind of a more important top again. We'll have to just monitor as we get closer to that window. But I think from here in that mid-late September timeframe, I don't believe we've put enough price back in. I think there's more to go. So,
okay. All right. So let's talk about Ukraine here just a little bit. And more cargoes are making their way out of the Black Sea. We're starting to see that. Not like it's a huge amount coming out at all, but it's more than zero. And that's where the market had planned to see that number stay for a long time. Zelensky came out yesterday and said that our goal here is to not only win and get back where we start out with Russia, but also take back the Crimean Peninsula and the Donbass region as well. So they're in it for the long haul. I guess as you take a look at what's going on in Ukraine with the geopolitical stuff that's happening there, and then more and more ships finding their way out of the Black Sea, what are your thoughts there, and how do you think the market's going to react if 4 or 5 cargoes a day are getting out of the Black Sea?
We've already reacted to there's some grain coming out of Ukraine now. We've traded that. It's already in the market. Old news, no longer an impact, in my opinion. It's already been traded. What hasn't been traded is, I think the market's actually trading that we're going to get substantially more grain out of Ukraine. And I think they might be making a mistake, that they're overestimating how much grain is going to come out of there. I think the next big adjustment is going to be that things are going to get worse again in Ukraine. And then those ships may actually not increase, or they actually may slow down, or they may actually close it off again. To me, that's the bigger risk here, is that we have a false sense of security that grain is going to continue to be allowed out. I don't so sure. The U.S. Embassy yesterday came out with an alert. All Americans need to get out of Ukraine immediately because they're expecting a dramatic deterioration in Ukraine from Russian aggression. That came out yesterday afternoon. I don't think that's the kind of environment that's going to be required to allow grain to get out of Ukraine in larger quantities. In fact, I could argue it actually might shut the thing down again. So I think where we're heading is something more bullish again on the Ukraine front after overpricing in the fact that some grain's going to move. It just looks to me like this has been a temporary chessboard match play, and the next shoe to fall is going to be re-aggression again. And I just can't imagine, if the embassy is so worried about Americans in Ukraine that they're telling them, please get out immediately, how that's going to be good for grain moving out of Ukraine. So
yeah, that's a good point. All right, so let's talk about what we see happening over on the protein side. You take a look at what's happening with cattle cash prices. They hit a 2-week low yesterday, and that's a little bit of a different pace than what we've seen here over the last a couple months here. So as you're looking at the cattle market, Shawn, what are your thoughts there?
Yeah, we got a little bearish here, as you know, Casey, the last few weeks. Yep. Some of our indicators were telling us that smart money algorithm was getting some aggressive selling. We were looking at toppy on the charts seasonally, demand tends to back off a little bit for cattle. And of course, when the corn price takes off, the feeder cattle market always gets hit, which it has. So I kind of think we have more to go here on cattle to the downside. I kind of think mid September-ish, late September-ish, when grains are likely to top out, would be a time to look at, the cash buy side of the cattle market. I just think we've had a good run. We had we had a pretty solid rally from late June into early August, and it's just time for rest. In the hog market, we had a crash. I mean, we've had a complete waterfall crash from 92-ish area on the charts down to this low 80s on the charts, depending on what contract you're looking at. And it just seems to me we hit a demand air pocket here. There's a lot of weird things going on with the global economy, with the U.S. economy, and it just seems like we hit an air pocket seasonally and some demand here. And so the hog market, has kind of really taken on the chin. Having said, and remember, we also turned bearish hogs around the same time because we were also seeing some toppy patterns with our smart money algorithm and things. So we're not surprised at these corrections. We're a little surprised that hogs corrected so aggressively. But if you look at the charts, we're in very strong area of support seasonally, specifically on hogs. They tend to really like to go up from here into early October based on seasonal rebuilding of demand going into the holiday season. I'm looking at the Chinese hog price has rallied 30% here in the last 6 months, showing a shortage of animals, being the herd liquidation that we saw post second round of ASF is over. The rebuilding, less animals coming, less pork coming, pork shortages coming, and the high demand part of the season for pork demand from China ahead of their holiday season, holidays in January, February, is now into the end of the year. I think they're going to come back, especially with this big knockdown in U.S. hog and pork prices, and say that looks like a pretty good deal to us. And that's been one of our theses, as you know, Casey, that we thought we would see some Chinese demand come back that would lead to some better pricing as we get on to the fall. And I think the hog market at this level is looking pretty interesting here. So if I'm a buyer, a cash buyer of lean hogs, if I'm in the pork business, I think this is a pretty good opportunity to be looking at protecting some upside price risks. I think there's going to be some better pricing ahead. So
right on. Okay. Well, Shawn, good stuff as usual, man. Go ahead.
Well, one other thing, I thought this might be interesting. It's something that we thought, there's a lot of talk about, the heat that we've had here in the U.S., the extreme heat that they've had in Europe, the extreme heat that they're having in southern China, and of course La Nina. By the way, it's not a new. That's kind of, you normally have hot, dry patterns, but the heat has been a little over the top, just excessively hot. And I think one of the reasons that this might be happening is the Tonga volcanic explosion that happened earlier. If you remember, that was an underwater volcano.
Right.
And if you remember, that did not deliver sulfur dioxide in the atmosphere because it was an underwater volcano, and the sulfur dioxide wasn't allowed to push that eruption was a VEI 6 if it had been above ground, but it didn't deliver on the sulfur dioxide. But what it did deliver on was massive water vapor in the stratosphere. In fact, there was an article that was written about a month after that explosion went off by NASA. And NASA actually does some really good work. If you actually look at the research papers they put out, for, not their public comments, but their actual research is really good. And they put out a research paper that talked about how they've never seen a underwater volcano of this magnitude before. We've never seen water vapor go in the stratosphere in these kind of quantities ever before. I'm not aware of it. I mean, we're in uncharted territory, but we do know water vapor has very, very strong ability to trap heat, especially if it gets stuck in the stratosphere. And if it gets stuck in the stratosphere, which it was, it'll be there for a year or two. And they made the comment that they thought that this could add to some extreme hot weather potential for the next year or two because of this unusual natural phenomenon that took place. And I think their thesis is starting to verify. because we normally have hot, dry weather, La Nina, but it's been over the top hot. I think maybe that this Tonga massive explosion and this massive water vapor push into the stratosphere is actually having a heating effect, a natural heating effect that we might have to be dealing with here. And so I guess what I'm getting at is I think that this is something we're going to have to modulate in our view in terms of, some warmer extremes than we would normally see under normal circumstances because of this natural phenomenon. The likes, like I said, when we're done with this phase, we'll know what an underwater volcano can do and what it means. But it does mean, or it does suggest that the research NASA did is verifying that we're getting some water vapor heating of the air, trapping the heat in that we would normally not expect to see. I just find that very interesting. A lot are attributing this heat to, humans' involvement. And I would say that the science is actually suggesting it's a natural phenomenon. And that's something we want to be paying attention to going forward, in terms of, especially when we get into 2024 and 2025, when the Gleisberg cycle kicks in, Casey. It looks to me like that water vapor concentration could still be floating around in the stratosphere. It may create a more challenging heat environment than we would normally expect. So just something that I found very interesting that not a lot of people are talking about, but that scientists are talking about, that can certainly would seem to me to be a logical contributor to why we're seeing some heat that we really haven't seen in a very, very long time. So,
right on. Hey, good stuff to think about. I totally forgot about that volcano and what it did when it actually went off the first time, right after that, and how that affected the environment.
And if you want, I can email you the link to this NASA article, and if you want to post it anywhere. I mean, it's not like this is proprietary information, man, but it's a really good article and was written, many, many months ago, and they warned that they thought this could happen, and it's happening. So, they always say follow the science. Well, follow the science. There it is. I think it's a good read for anyone that's really interested in, what actually might be going on here. Naturally, phenomenon events actually do shape and form our weather all the time. So
that's crazy. Yeah, it's good stuff, man. I'm glad you brought that up. That'd be a worthwhile article to read there. So, well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, HACKETT, advisors.com. Lots of information of how we use our weather algorithm and our capital flows algorithm to help price forecast markets and give very good advice to farmers, producers, end users, anyone involved in the ag space at this point in time. So,
right on. Looking forward to your presentation at the Moving Iron Summit. It's going to be a good one, and going to have a lot of good information, and you're going to be talking to a sold out crowd, Shawn. So you're gonna have a packed house there, man. So it'll be good times. No pressure.
I know. I better lose a little weight.
I think you'll be all right. So, well, Shawn, appreciate you being on the podcast, man.
Thanks, Casey. Appreciate it.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast and check out the Moving Iron Podcast YouTube channel. Moving Iron Podcast YouTube channel, pretty original name there. So check that out. Also, if you are coming to the Moving Iron Summit in Nashville, looking forward to see everybody there. Like I did say, it is a sold out crowd, so it'll be a lot of good time for networking and what have you there. So interested in doing that, for next year, send me an email, MovingIronPodcast at MovingIronPodcast.com, and I'll get you on the waiting list. So with that, I am Casey Seymour, Shawn Hackett. Let's move some iron, folks. Out.
Moving iron in the 21st century.